Hey everyone, welcome back to The Explainer. Let's just jump right in, shall we? Today, we're unpacking the latest highly anticipated PolymerBazaar weekly pet report for the final week of June 2026. Now, if you're navigating the polymer markets right now, you know exactly how critical these weekly corporate trends and financial analyses are for your bottom line. We've got a lot of fascinating data to cover today, so let's get straight to it. So we're going to answer the multi-million-dollar question right out of the gate. What exactly is the global PET market doing this week? And honestly, should you be stockpiling raw materials? Well, spoiler alert, the current market landscape is a bit tricky. Making the wrong move right now could unnecessarily tie up a ton of your essential capital. So let's let the data guide our strategy. Section 1, the global paiding demand slump. Let's look at the market overview. Okay, we're taking a quick macro-level world tour to see what's happening across the major international trading hubs. And you know what? We are seeing a striking consistency right now. Across the US, Europe, Turkey, and China, the shared theme is decidedly sluggish demand. In the US market, there's absolutely no improvement in demand, though supply is perfectly fine, which is keeping prices flat at $1,630 per metric ton DDP US West Coast. Over in China, it's a remarkably similar story of weakness. Buyers are simply refusing to build inventory. They're choosing to buy only as needed, and that's holding spot prices at 7,200 yuan per metric ton. Literally everywhere we look, buyers are hesitant, and offtake from major industries is noticeably slow. This really highlights the regional divide and how different areas are reacting to that universal slump. While the U.S. market holds relatively steady with its FAS Houston prices, European and Turkish markets aren't just sluggish, their pricing is actively sliding. European buyers are holding off on purchases because they fully expect further drops, and that hesitation has actually pushed FD and WE prices down by 10 euros to 1,340 euros per metric ton. Turkey is dealing with the exact same weak demand combined with abundant supply, and they also saw a $10 drop down to $1,540 per metric ton. So the key takeaway here is that while some markets are stagnant, others are actively rewarding buyer hesitation with lower prices. Moving right along to Section 2, Indian market price shifts. With that global context in mind, we're going to zoom in and see exactly how this worldwide sluggishness translates directly into local ground-level pricing strategies in India. To really understand the domestic dynamics, we first have to establish the baseline for incoming materials. The latest foreign offers for July 2026 shipments of 0.80 IV bottle-grade PET, they're holding pretty steady at approximately $1,250 per metric ton CIF India. This gives us our starting context. Those incoming foreign shipments aren't dropping off a cliff, which sets up a very interesting pressure cooker for domestic producers who are forced to compete with those international rates. And that brings us to a massive number, 4.5 rupees per kilogram. That is the major price cut announced during the last rate revision by the major India producer, Reliance Industries. This cut went into effect on June 20, 2026, and crucially, they applied this substantial reduction across all PET grades. This is a highly relevant metric, right? It shows just how aggressively local producers are having to adjust their pricing structures just to stimulate offtake and remain competitive against the steady foreign offers we just talked about. All right, Section 3, Strategic Buying Advice and Market Navigation. Let's combine our global macro context with local Indian market realities to figure out the absolute best move for converters right now. We really need to look at the psychology of the local buyer. Honestly, demand remains heavily sluggish. Why? Well, processors have zero interest in building up their raw material inventory due to incredibly slow finished product sales. There's been no improvement on that front whatsoever. Processors simply can't move their finished goods, so they obviously aren't buying raw PET. Couple that with the absolute uncertainty regarding future price directions, and you've got a market ecosystem that's effectively frozen in place. Okay, let's bring it all together. Here is the final, data-backed buying strategy directly from the PolymerBazaar report. The actionable advice for this week: buy strictly on a need basis. Do not build excess inventory. Why? Because recent export offers are sitting on the lower side. With this ongoing pressure, it's highly likely that local producers might reduce their ex-works prices even further. If you try to stockpile now, you might get caught paying a premium compared to where prices could be very shortly. And if we speculate on a timeline for global price recovery based on these trends, honestly, the data points to so much absolute uncertainty right now that it looks like we might be waiting a while for any real upward momentum. Protecting your immediate capital and buying only what you immediately need is for sure the most sensible move. To make sure you stay completely ahead of these potential further cuts, you need this data the very second it's available. You can actually get these weekly financial analyses instantly on your phone. Just use the PolymerBazaar's AI chatbot. All you have to do is message PET on WhatsApp to +919 3746 24365, and you'll get a reply with the latest data in like 5 seconds. Or if you prefer to read the full PDF report, just head over to their website at polymerbazaar.com/future-trend/PET. I want to leave you with this provocative thought. With local producers clearly poised for potential further cuts in response to this massive global demand slump, how are you going to adjust your specific procurement strategy this week? Will you strictly hold the line, or are you seeing localized demand in your specific sector that might actually force your hand? Think deeply about it, run your numbers against the data we covered today, and we'll see you right back here for the next explainer to analyze exactly how the market shifted. Thanks so much for joining us.